I'm joined now by partner Richard Weaver, who leads the specialist London capital markets team. He's got 20 years of experience of both the UK and internationally. Thanks very much indeed for joining us. It's a quiet time. We've seen the Ocado prospectus coming out. What do you think of the timing?
Ocado, I guess, it's the end of the first half season, so over the next 6 or 8 weeks we're going to start seeing that quiet period where basically the city closes and then hopefully a return to activity in September. So Ocado is really almost going to be the final test of how the first half year's gone.
And overall, how has it gone? It has been a pretty quiet time.
It has been, yeah, very much so in UK and Europe. A lot of activity, however, in Greater China. You mentioned Agbank, and that's the massive transaction. But China has been going well in the first 6 months.
Let's talk a little bit about that transaction. How is it going? How do you perceive that it's going to go?
Well, colleagues in Hong Kong tell me that the institutional demand has definitely been there. Interesting that there's been big take-up from various players. Standard Chartered picked up a cornerstone, lots of other cornerstone investors. Retail appetite a bit more muted compared to, say, the reaction to ICBC, the previous largest float.
Now, what about the fourth quarter? Are we expecting to see suddenly an awful lot more people coming to market, a sudden rush of IPOs finally?
I always like to keep a sort of optimistic view of the market,
Yes.
and I hope so. I think what we can say for certain are there's a big pipeline of high-quality companies ready to go. You'd expect that after a couple of years of fairly flat activity. We're seeing a lot of activity in the oil, gas, natural resources market, so Fairfield have made an announcement. You've got potentially a lot of investor appetite for those sorts of stocks coming up over the next couple of quarters.
Now, obviously there must have been a lot of people who've been holding back, waiting for conditions to be right. Is there anything that you can see as a kind of a signpost that will make some of the more cautious companies say, OK, right, now is the time? What are they waiting for?
In a sense, there's a lot of them waiting to see what everybody else does.
Okay.
And I know that's not the sort of helpful steer, but nevertheless, that's what ultimately happens. I think what companies are really looking for in their advisors is a bit more stability. You mentioned the volatility earlier, and if we can start getting a couple of months of stable economic background, stable activity, then that's where companies are going to press the button.
And do you think there will be a good response from investors? I mean, there must be, again, some money out there that's waiting to come into these IPOs.
Absolutely. I mean, there is a wall of investor cash out there, but unsurprisingly, they're picky. And they're picky on valuations. And some of the companies we've seen which have been near misses rather than successes, investors have not turned them down. They've just said, we don't like the price.
Yes, and we've seen that with Ocado. The price maybe a little bit lower than many were expecting. Let's talk a little bit about different markets, because London traditionally has kind of been the most popular compared to Frankfurt or Paris. Sure. Is that still the case?
I think it is. I think there are still some structural reasons why London will be attractive. You've always had, in terms of the nexus, you've had Hong Kong, London, and New York as being the three major centres. I think in terms of the appetite, investor capital, and also analyst research, London still is perceived as leading the way. And for example, certain of the things like SR coming to the market in the first half of this year, big oil and gas company joining the FTSE, that's a sign, I think, of continued confidence in London.
What is it about London that makes foreign investors still interested in coming here?
I think we underestimate the international element of London. Obviously, English as a spoken language is helpful, but I think ultimately, if you're looking as a company, it's the pool of institutional capital, and that's where London figures very well against its European counterparts.
Now, as many things seem to be moving to China these days, do you think that this over time is going to change slightly?
I think China will continue to be massively powerful and will grow in power. But I think it's important to understand that a company needs to have a Far Eastern story, I think, to be a big success in China. So you can't simply uproot a kind of European company and make it hugely attractive, particularly to Chinese retail investors. So the success stories have been ones that have had an appeal there.
And that's not necessarily the same in London. London has got a more international view.
I would say so, yes, because of the features of the institutional capital.
OK. If we do get a quiet fourth quarter this year, I mean, suddenly, at what point are we going to see the floodgates opening? I mean, they can't hold off forever, can they?
Well, they can't, because you're absolutely right, because that's going to get down to a pricing issue, isn't it? It's like selling any asset. You've got a willing buyer, willing seller, and you'd have thought that pent-up supply is going to explode through to... Some of those companies will have to sell.
Yeah. So eventually they'll be very busy.
They will have to.
Richard Weaver, thank you very much indeed
Pleasure.
for joining us.